The first time Marcus dismissed my business opinion, I was 19 and he was 27. We were at Dad's retirement dinner, and Marcus had just landed the first major contract for his little logistics company. He spent 40 minutes explaining his business model while the rest of us picked at salmon and smiled like he was already on the cover of a magazine. Dad asked me what I thought, probably to be polite. I said the pricing looked tight, but maybe Marcus should build more cash reserves before expanding the fleet in case fuel costs spiked. Marcus laughed before I finished. Stick to your college classes, Rach. Business strategy is a little more complex than Econ 101. Everybody chuckled. I went back to my salmon. That was 14 years ago. I was 33 now. Marcus was 41, and somehow, nothing had changed except the size of his ego and the square footage of the rooms he used it in. He had built Martech Logistics from 3 trucks into what he loved calling a $400 million empire, 340 employees, operations in 12 states. A corner office with a view he managed to mention in almost every conversation. I ran a small financial consulting firm out of a modest office in downtown Seattle with 6 employees and steady profits and a business model Marcus treated like a cute little hobby. Still doing the consulting thing. He'd ask at family gatherings in the same tone people use for children who still collect stickers. What Marcus didn't know, what nobody in my family knew, was that I'd made my first $10 million by 25 through early tech investments. By 30, I'd turned that into $340 million through portfolio management, angel investing, and one very timely cloud infrastructure bet that went public at a valuation big enough to make headlines for a week. I lived quietly, worked quietly, spent modestly. My consulting firm was real, but it was never my main engine. My real work was capital, structure, timing, and patience. And for the last 8 years, a significant piece of that work had been my brother. Back in 2016, Martech had nearly collapsed. Marcus had expanded too hard, too fast, and too proudly. He was overleveraged, underprotected, and about one bad quarter away from losing everything. He needed $180 million to survive. His bank went looking for private capital. Through a carefully layered network of LLCs and investment vehicles my lawyers built, I became that capital. The terms were generous. 12% annual return, no board seat, complete anonymity, and a strategic advisory role that Marcus never knew was coming from his silent partner through his financial advisor, Theodore Chin. For 8 years, I watched Marcus build his reputation on a foundation I paid for while listening to him explain at holidays that I didn't understand real business. The family meeting happened on a Saturday night at Marcus's house in Bellevue, the kind of place that looked professionally arranged for a magazine shoot and never quite felt lived in. 18 family members. Catered appetizers. Good wine. Soft lighting. Marcus standing in front of the fireplace like he was about to address shareholders. I wanted everyone here, he said, smiling wide, because I have incredible news. Martech Logistics has attracted acquisition interest from 3 major firms. We're looking at valuations between $850 million and $1.1 billion. The room erupted. Dad looked like he might burst from pride. Mom got teary. Jessica, Marcus's wife, held up her phone and started recording. Marcus soaked it in like sunlight. This is the culmination of 8 years of strategic vision, aggressive growth, and calculated risk-taking, he said. When I started with 3 trucks and a dream, people doubted. But I understood leverage. I understood scale. I understood timing. I took a sip of wine and said nothing. The acquisition should close within 6 months, he went on. Which means this family is looking at generational wealth. My equity stake alone is worth between $600 and $750 million. Everyone applauded again. I did the math in my head. He was lying, or more accurately, bragging from a fantasy version of his own cap table. At those valuations, knowing the actual structure of the company, Marcus's equity was nowhere near that. He owned 38% after debt conversion. I owned 51%. The remaining 11% belonged to early employees through the equity plan. His real position was closer to $180 to $240 million before taxes. Still obscene money, just not the story he was telling. Rachel, you're quiet, Marcus said, turning to me with that familiar patronizing smile. No congratulations for your big brother? Congratulations, I said. You should take notes, he said, and several people laughed. This is what strategic business building looks like. Not small consulting contracts. Real empire building. Understanding capital markets. Understanding scale. I'm familiar with capital markets, I said. He grinned. Right. Your little consulting firm, how's that going? Still in that strip mall office? It's downtown, actually. And it's going fine. He turned to the room as if I'd proven his point. See, that's the difference between small business thinking and real entrepreneurial vision. Rachel does fine. Comfortable living. Nothing wrong with that. But when you know how to leverage capital, when you understand, Marcus, maybe we should talk about your capital structure. The room went silent. He blinked at me. What? Your debt to equity ratio, investor positions, actual versus claimed ownership stake. His smile hardened. I'm not going to bore everyone with technical details at a celebration. Because the numbers you're citing don't account for your debt load or your silent partner position, I said evenly. If you're claiming $600 to $750 million in personal equity, then you're either overstating your ownership or ignoring outstanding obligations. His jaw tightened. Stick to your little side projects, he said. Real business is beyond you. This is sophisticated corporate finance, not whatever small-time consulting you do. Dad stepped in immediately. Marcus is right, honey. This is pretty specialized stuff. Let's just celebrate. I smiled, because there was nothing else to do in that room without burning it down. Then my phone buzzed. It was Theodore. Need to speak with you urgently. Marcus is making statements about valuation that suggest he doesn't fully understand the capital structure. Should I clarify? I excused myself, went into the bathroom, and called him. He answered on the first ring. Miss Chin, I'm sorry to interrupt your evening, but these acquisition talks are real. I've seen preliminary term sheets. If they move forward, the ownership structure will become public during due diligence. I know. At those valuations, your 51% position would be worth between $433 and $561 million. Marcus's stake would be substantially lower than what he's claiming. Once disclosure begins, he will learn that his younger sister has owned the majority of his company since 2016. I looked at myself in the mirror while Theodore talked. Calm face, steady voice. Same woman Marcus had been underestimating since I was 19. Are you prepared for that revelation? Theodore asked. Yes, I said. Then I thought about Saturday dinner. Stick to your little side projects. Real business is beyond you, said to the person who had saved his company. Said in front of our whole family, again, like 14 years had taught him nothing. I stopped looking at my reflection. In fact, I said, I'd like to accelerate the timeline, execute my withdrawal rights under the partnership agreement. There was silence on the line. Miss Chin, that would trigger a forced liquidation event. He'd have 90 days to buy you out at fair market value or agree to a sale. Given his actual equity and debt load, he can't buy you out. I understand. When would you like me to initiate the notice? Tonight. I want corporate counsel to have it Monday morning. This will destroy your relationship with your brother. I leaned one hand against the sink. Theodore, I don't think we have a relationship. We have a dynamic. He dismisses me while depending on me. I'm done protecting him from the truth of that. When I went back to the party, Marcus was still talking, still glowing, still telling the story of a company he believed he built alone. I sat quietly, finished my wine, and let him enjoy the last easy night he was ever going to have. Monday morning at 9:47, the formal notice hit his corporate counsel. The silent partner owning 51% of Martech Logistics was exercising withdrawal rights under the 2016 partnership agreement. Marcus had 7 days to respond with one of three options: buyout, replacement financing, or accelerated sale. He called me at 10:23, then again at 10:31, 10:45, 11:02, 11:28. I silenced my phone and reviewed portfolio reports. By afternoon, Theodore called. He knows there is a silent partner with majority ownership, he said. He doesn't know it's you yet. He's requesting an emergency meeting. Wednesday, 10 a.m., my office. Tuesday, my phone showed 47 missed calls and a full progression of texts from Marcus. Confusion, anger, legal threats, desperation. Who is the silent partner? Why didn't you tell me someone owned half my company? This is sabotage. Please call me. I need help. I replied once. I'll see you Wednesday at 10. The silent partner will be there. Wednesday morning, I arrived at my office at 8:30. Sarah, my assistant, cleared my schedule. Theodore arrived at 9:45 carrying a briefcase full of documents. At 9:58, Marcus came in with his lawyer, David Brenner. They both looked faintly insulted by my office, like they'd expected a tower and instead found clean glass, organized files, and competent furniture. Sarah showed them into the conference room. At exactly 10, I walked in with Theodore. Marcus frowned. Rachel, what are you doing here? Where's the silent partner? I sat down across from him. Hi, Marcus. I'm the silent partner. He stared at me. That's not funny. I'm not joking. I slid the folder across the table. Corporate documents, LLC trail, ownership records, partnership agreement, Theodore's intermediary role. 8 years in black and white. David started reading immediately. His face changed first. Marcus looked from him to me and back again. "This is impossible," he said. "You don't have that kind of money. You run a small consulting firm." "I built a $340 million portfolio over 15 years, I said. "I've angel invested in 17 companies. I've been a silent partner in 9. Martech was my largest single investment, $180 million in 2016 when you were facing bankruptcy." The bank said institutional investors. The bank said what I paid them to say. He looked sick. "For 8 years?" he asked. "You owned half my company for 8 years?" 51%, I said. "You own 38, your employees own 11. He put both hands flat on the table like he needed help staying upright. "Why?" "Because you were my brother. Because you needed help. Because I had the capital and believed your company could become something valuable. I structured it to save you without humiliating you by announcing that your little sister had rescued you. And now you're destroying it." "No, I'm enforcing reality." David spoke before Marcus could. "She's correct. The agreement is ironclad. You can't afford a buyout at fair market value, and you can't replace this capital on the timeline. Your best option is the acquisition." Marcus barely heard him. "At those numbers," he said slowly, "you make more than I do." "Yes. From the company I built. From the company we built. You handled operations, client relationships, execution. I provided the capital structure, the survival funding, and more of the strategy than you realize." He looked up sharply. "What does that mean?" "The fleet automation project that saves you $22 million a year? That was my recommendation through Theodore. The proprietary software development you now call your competitive advantage? Mine too. You dismissed both ideas when they came from me socially. You accepted them when they arrived through an advisor." His expression changed then, not just humiliation, recognition, a painful kind. "The automation project," he said. "That was you?" "Yes." "The software?" "Yes." He sat back like the air had left him. "So, every strategic decision that actually worked." "Not everyone," I said. "You're good at operations. You're good with people. You built relationships. But the capital allocation, the scaling logic, the positioning that made buyers interested, that was me." The room was very quiet. Finally he asked, "What do you want?" "Honesty. We move forward with the acquisition as partners. Transparent ownership. Shared credit. And you stop acting like my business judgment is decorative." He looked at the table for a long time. Then he said, very quietly, "I've been an ass to you for 14 years. "Yes. I'm sorry." I waited. He met my eyes. "I'm genuinely sorry. I should have listened. I should have respected you. I was arrogant, and I was wrong." I believed he meant it, which didn't erase anything, but it mattered. "You're not stupid, Marcus," I said. "You just got used to thinking visibility meant authorship. It doesn't." He nodded once. "Okay. We proceed as partners." David drafted the agreement. I withdrew the liquidation notice contingent on Marcus's cooperation. The acquisition would move forward with both of us at the table, and full disclosure during due diligence. By 12:30, it was signed. As Marcus reached the door, he turned back. "How did you know that automation would work?" "Because I'd invested in 3 logistics companies that had already proven the model." "And the software firm?" "I was an angel investor there too." He gave a tired, almost embarrassed laugh. "I really have been an idiot." "You've been dismissive," I said. "There's a difference." The next 90 days were all meetings, diligence, financial models, legal review, and the strange experience of being introduced publicly as what I had privately been for years, a major business force in my brother's company. The buyer, a Fortune 500 logistics conglomerate, was fascinated by the structure rather than alarmed by it. They saw patience, sophisticated capital management, strategic discipline. The silent partner story impressed them more than it embarrassed anyone. The final valuation came in at $980 million. My 51% stake was worth $499.8 million before taxes. Marcus's 38% was worth $372.4. The employee equity pool took the remaining 11. The press release named both of us as co-founders. The family found out, of course. Mom called first, stunned less by the ownership than by the money. "How did you even get $180 million to invest?" "I built it," I said, quietly. "Why didn't you tell us?" "Would you have believed me?" She didn't answer. Dad asked me to coffee a week later. He apologized with the awkward sincerity of a man realizing he'd mistaken noise for substance for far too long. "I've been proud of the wrong kid for the wrong reasons," he said. "No," I told him. "You were proud of the visible one." That landed harder. The money transferred in December. After taxes, I netted roughly $312 million from the sale, bringing my total portfolio to about $652 million. Marcus netted around $233 million, still life-changing, still more than enough to build whatever came next. We're cordial now, not close. He's building another venture in logistics technology. He hasn't asked me to invest, and I haven't offered. I work under my own name now. No anonymity, no intermediary. No more shrinking myself to make other people comfortable in their assumptions. Sometimes I wonder whether I should have told him sooner. Forced the truth years earlier, avoided the explosion. Then I remember that Saturday dinner. "Stick to your little side projects. Real business is beyond you," said to the woman who had saved his company from bankruptcy. Said to the woman who owned 51% of it. Said to the woman whose strategy had fueled the very success he was bragging about. I didn't destroy my brother's business. I revealed the foundation it had been standing on for 8 years. And sometimes the kindest thing you can do is stop protecting people from the reality of their own dependence. Now, Marcus knows. Now my family knows. Now everyone knows. And I am done being invisible while being indispensable.